What are some of those factors to consider before investing in fixed income investments? Let's quickly look at it. Number one is your goal and objective. What is your goal and objective for investing? Don't just put your money in fixed income investments just because of the interest rate being offered. Ask yourself, what is my goal? What is my objective? When the purpose of a thing is not known, as good as investment is, the abuse is inevitable. You just see yourself putting money into it, not tracking your investment, and eventually you don't even know how much you have in your portfolio, because the goal of investment is to help you grow your money over time, and whatever you don't measure you cannot manage well. So this needs to be defined right from time. What is my goal for investing in this fixed income investments? Whether it is FJ savings bond, whether it is commercial paper, it is fixed dollar fund, whichever one it is, make sure your goal and objective is clearly defined before you put in your money. Number two is risk appetite. What is your risk appetite? If you know you are risk averse, for instance, then the kind of fixed income investment that is suitable for you will be FGN savings bond, will be treasury bills. So it's better for you not to go for something like commercial paper, something like corporate bonds, because for those ones you have to do your due diligence. You need to know the credit worthiness of the issuer. You need to know some things about financial statements, fundamentals of companies, because they help you to make informed decision on their ability to pay their returns. Even though it is fixed income investments, you still need to know that there's something called credit risk. Credit risk is involved when you are dealing with commercial paper and corporate bond. Next factor you need to consider is the risk to reward assessment. Do an assessment on the risk to reward. What is the risk involved? Okay, for FGN savings bond, for FGN bonds, for treasury bills, it's almost zero risk, even though there's nothing called risk-free investments. It is only in theory that we have that. So you need to look at risk to reward assessments. Don't say because commercial paper is offering you more reward and because of that you jump into it. Assess the risk. What is the risk involved? Don't forget, the risk involved in commercial paper and corporate bond is much more higher than FGN savings bond, is much more higher than treasury bills. That is number three. Number four is the time horizon, is the duration and time horizon. What is your plan? What is the duration that you have for these investments? What is the duration? What is your time horizon? Maybe you know that this money, this capital, this principal you are putting into the investment, you will be needing it in the next 90 days. Then it will be unwise for you to go and put your money in FGN savings bond. 90 days means you can only do treasury bills. 90 days means you can only do fixed term deposits of 90 days. So you need to consider your time horizon. And if you know that you are going to need the money in the next 3 years, doing something like treasury bills may not be the appropriate thing for you, especially when you know that you lack discipline in investments. So which means you may collect the money in the first year and you may not reinvest it. So if you know that you lack this discipline, the best thing is for you to just go for a straightforward investment that offers you the opportunity to invest in 3 years straight. Don't look at you may not have to look at the interest rate at this point. It is your objective that I need this money after 3 years, not so much on the interest that is being offered. Everything is not just about the return. You need to look at, that's why I spoke about objective in the first place, and objectives are personal. Number 5 is liquidity. What is the liquidity involved? What is the liquidity? Liquidity simply means the ability to quickly sell your investments assets when due. Maybe you need money in the next 48 hours. You need to consider liquidity. How liquid is this asset? How liquid is this fixed income instrument? How liquid is it? Is it something that I can easily sell? And that leads us to the last point, which is the investment platform. Now, depending on the number of subscribers that each platform has, these are things you need to consider. Consider a licensed stockbroker. Consider a licensed fund manager, like AfriInvest, like United Capital, like Pattern Securities, like Meristem, like ARM, like AXA Mansard. consider licensed stockbrokers, because these ones that I've just mentioned, they have the platform they have a host of subscribers, unlike third parties that people are scared of. I don't want to, some third party like RightVest, some third party like Trove, Chaka, Yocha, Bamboo. Am I saying they are not good? They are good, but I'm only trying to say that they are third parties. So you need to understand the difference between the two, just like OPay and GT. OPay is a fintech app, while GTB is a conventional bank. And you can't compare their customer base to each other. GT has more customer base. I hope you understand the example I'm trying to give. So those are the 6 factors I think you should consider before investing your money in fixed income investments. In the next video, I'll be talking about the disadvantages of fixed income investments. So we meet in our next video. Thank you.